Dan loves tech. Dan, good to see you. Don't know where to start, so I'm going to start on Nvidia. I mentioned at the top, we're seeing the bulls return to Nvidia. Not in a big way, but I would say in a nice way. What's the play there?
Look, I think the reality is China's going to reopen, for Nvidia, and I think that's something that wasn't necessarily factored in fully. I think investors are realizing it's a big change in the beltway. And look, Saz, the reality is there's one chip in the world fueling the AI revolution, and that's Nvidia. And I think as it plays out, numbers are significantly underestimated. I think 15 to 20% at a minimum going in 2026. You put that together, I think we're looking at $250 stock in a base case to end 2026.
Another case for Nvidia, Dan, is it this? And you can tell me if I'm wrong. You and I have known each other for many, many years. It's okay. We have a debate here. That Nvidia has less exposure to OpenAI than its rival AMD, because AMD might be partially owned by OpenAI in 10 years.
Look, right now the reality is that, associated with OpenAI is a bad thing. Now, I disagree with that. You've talked about it, but no doubt from a trade perspective, Nvidia, they're obviously they're not wed to an OpenAI. And I think to some extent, I think you've talked about it. When you look at the divergence of those related to OpenAI, whether it's Oracle or Microsoft or whatever it may be, those stocks are obviously under more pressure. But look, my view is as we go into 2026, investors are underestimating the scale and scope of the AI revolution for Nvidia, for OpenAI, for Oracle, which I think is table pounded here, despite obviously a lot of the negative sentiment for Palantir and others. Because look, only 3% of companies in the U.S. have gone down the AI path. And for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
Dan, later on in the show, I'm going to have Marianne Bartels on. Really excited to talk to her. She's making the case that tech might see, her words, not mine, a reset year next year, but then go off on a very strong bull run looking out over the next decade. If there is a reset in tech, let's just say the first quarter next year, what triggers that?
Yeah, look, and she obviously always has great thoughts. I think my view is, look, the white knuckle moments, whether they're resets or whatever you may call it, they create the opportunities. I mean, go back to, we'll be at CES again, go back to a year ago, right? I mean, Jensen comes out, the black leather jacket, I think even maybe potentially diamond studs in the back or whatever. Talk about quantum.
I think that's your jacket, Dan. I think that's your jacket.
I think that could be your jacket, Davos. But we're getting off topic. But the point is, look, the reality is negative on quantum. Remember the sentiment, going to DeepSeek moment in January. You're going to have these moments, but my view is you're in year 3 of an 8 to 10 year build out of the AI revolution.
Outside of Nvidia, I love what some of the thoughts you've been putting on your X account, Dan, on Tesla. Now, I'm sure you saw the photos of Waymos getting stuck in San Francisco with the power outage, and my first thought was, this is everything that could go wrong with the Tesla robotaxi.
Look, my view is 2026 is going to be probably the most important year, I'd say maybe in its history, for Musk and Tesla. Because, look, the autonomous chapter now comes to Tesla. 30 cities where we see robotaxis, ultimately in the United States. Are there going to be issues? Are there going to be speed bumps? Could there be delays here and there? Yeah, I mean, obviously you saw the blackout in terms of Waymo in San Francisco. But look, I think next 3 to 4 years, 20% of vehicles are going to be autonomous. And I think that ultimately is where it's heading. And that's why I think when it comes to physical AI plays, the best physical AI plays in the world are Nvidia and Tesla.
How much value, Dan, are you assigning to Tesla's robotics initiatives?
$1 trillion is what conservatively we view. I mean, look, if you own Tesla here, you're not owning it for what deliveries look like on Jan 2nd, right? I mean, you're owning it for autonomous robotaxis. And we talk about bull case 3 trillion, base case 2 trillion. Now, look, if I showed you a year ago where numbers were going to go for Tesla this year, you'd be like, the stock's $250. The reality is that investors are looking through deliveries and near-term numbers to understand what the autonomous chapter is going to ultimately bring. Because I could argue numbers could be up 4 or 5x when you look out over the next 3, 4, 5, 6 years. I think that's the way to view a name like Tesla.
Dan, before I want to get to Palantir, but why I love you, and many reasons why, as you know. But one is you cover damn near you cover damn near everything. So if Tesla's going to dominate in robo-taxis, what does that mean to a General Motors and a Ford, who are not really playing in this industry at all?
Well, first of all, to lump GM and Ford together, I disagree. I mean, I think what Mary's done and Paul at GM has been Hall of Fame moment for them, right? And the stock, I think, speaks for that. They've been able to navigate supply chain issues, pull back on EVs, but I believe like GM is in a much better situation. And again, they're going to kind of pick their spots. Ford obviously much more back against the wall, and we see that in terms of what Farley's trying to navigate. Look, I think what it means for the GM and Fords, they got to pick their spots. They got to figure out how they're going to go down the autonomous chapter. Do they eventually partner at one point with Tesla? I don't think that that's out of the realm, given where we see the autonomous world heading.
And Dan making some good points here. General Motors shares up about 56% year to date. Ford about 35% year to date. They're just coming off a big, almost $20 billion charge to their EV business. Dan, so on Palantir, I know you're watching this name. Is Palantir double next year? And if so, why?
I think it's $1 trillion market cap next 2 to 3 years. I think investors are underestimating how disruptive Palantir is on the enterprise. They've just started to tap into that market on the commercial business. So look, is it super expensive? Of course. But if you look at next 3, 4, 5 years, like I view it as like it's going to be the next Salesforce, the next Oracle, however you want to think about it in terms of on the software side. And I think Karp's playing a different game. He's playing chess as a mastered wizard. And I think a lot of others are playing, checkers at the kids' table.
I'm loving this comparison, or this duel that erupted in the fall, Dan, between Mark Benioff and Alex Karp, kind of taking shots at the other out there in media and X, I believe. If Palantir is a winner, then is Salesforce a loser?
Look, I don't think Salesforce is a loser because I believe Benioff's going to be able to turn this around. Agent 4 needs to be successful. They're probably going to have to do more acquisitions. But no doubt, look, Benioff, top of the mountain, the Hall of Fame, Mount Rushmore CEO. But for the first time in many, many years, there's, I won't call it a code red, but there's a threat to the business model. And I think they have to adjust. And that's why when you look at Palantir with no direct salespeople doing what they're doing, I think that it's a shot across the bow, not just at Salesforce, at ServiceNow, Workday, traditional software.
Dan, hit me with a tech stock you hate.
Look, Adobe's the one, I wouldn't say hate, but Adobe's the one that's probably under the most pressure, given you think about AI, what it's doing to their business model, what they need to prove. Massive success story, obviously, over the decades. But I think when you think about AI as a threat to a business model, I think Adobe, look, they're going through a turbulent little white knuckle period here.
Yeah, why do we're not going to be printing out PDFs anymore, right, Dan?
Look, they got to change. They're going to have to adjust and change part of their business model. But I mean, look, it's no different than Salesforce, no different than Workday. I mean, these are companies you either pivot or stay on the treadmill at 2.0 speed.
Lastly,
right?
Dan, this may be the last time I see you this year. And if it is, you've been traveling around the world all year, meeting with investors, covering this tech AI revolution. What has surprised you? Is there one thing that has absolutely blown you away this year?
Look, I think the thing that's maybe surprised me is just what I ultimately view as the enterprise adoption and how accelerated it's been. Go back to CapEx a year ago, right? Concerns about AI, big tech CapEx, and it's ultimately 50% higher than ultimately it was at the beginning of the year. I think that's ultimately the thing that it's that acceleration that surprised me the most. And maybe the other surprise, obviously is, I was hoping for more from the Giants and Penn State, but what are you going to do? I mean, we got another year next year.
There's not much you can do, Dan. Sometimes we're just at the whims of bad decisions by our sports teams. Dan Ives, happy holidays to you, my friend.
You too,
Thanks
man.
for making time, man. Appreciate you.